So normally you see pretty good action in my experience, in precious metals in September, October, November, and then January and February are usually excellent. If we have no choice but to do that, then that means the precious metals story is way more interesting than it was in those previous two bull markets because, the world's currencies were basically relatively stable during those two bull markets. And so, we had the nice run in gold and silver, and then they peaked, and then they started trending down again, or they plunged in 1980, and they trended down in 2012 through 2019 or so.
Precious metals analyst John Rubino mentions gold and silver's sharp rise as the most significant story in today's markets. Rubino compared the rally to past bull markets, but noted a crucial difference this time: the fiat currency system itself is breaking down. He argued that major economies, from the US to China, have overborrowed to the point of no return. Using France as an example, he said excessive welfare spending is now pushing governments toward financial and political collapse. According to Rubino, the global debt crisis has reached a stage where most advanced economies are cornered with no safe exit. He warns that governments will likely resort to inflating their currencies, sacrificing long-term value to stay afloat. This makes the current gold and silver rally far more consequential than past cycles, with no clear ceiling as fiat currencies weaken. Gold prices continued to sail upward, rising 1.41% to log a fourth consecutive day on the upside, and yet another record high. Silver followed suit, jumping 2.28% to hit the highest level in 14 years. While it might be tempting to take this as evidence of some new dovish signal in the Fed's messaging, that is probably the wrong interpretation. In his assessment, Rubino emphasizes that when the value of money itself is unstable, deciding when to take profits becomes nearly impossible. For mining stock investors, he recommended easing out of overheated positions or using covered calls to limit risk. The S&P Global Gold Mining Index has jumped 126% since January, making it the best-performing sector across all S&P categories. This insane rally in gold mining stocks is tied directly to the metal's own boom, with gold prices shooting up 52% since the start of the year. Before we dive into John Rubino's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
In financial markets right now, gold and silver taking off like they have seems to be generating the most headlines. And definitely for me personally, it's the biggest story because I've basically been a gold bug for 25 years now. And it's about time that stackers and other kinds of precious metals fans get the reward for their patience that I think we deserve. So yeah, right now gold is taking off. It's outperforming basically everything else out there, with the exception of silver. Silver is outperforming gold, and on the charts that you've got there, this looks like another precious metals bull market that is similar structurally to the 1970s and to the 2000s, both of which were great times to own gold and silver. I think this time is different in one fundamental way, though, and that is that the fiat currency experiment seems like it might be coming to an end. A lot of big countries, and I include most of Europe and the US and Japan and China on that list, have basically, exploited having a fiat currency, which is to say an unlimited credit card, by borrowing way too much money. And now they're kind of locked in. There's nothing they can do about it. Take France, for an example. They cut themselves very cushy retirement deals. Their versions of Social Security and Medicare are extremely generous. They get to access them at a fairly young age. And a lot of people in France now will make more money during their retirement years than they made during their working years. And that's bankrupting the French government. The French deficit is going through the roof, and every French leader knows this. So whoever becomes prime minister immediately tries for austerity. They try to cut back spending because they know they're heading for a financial cliff. And the people of France immediately hit the streets, get the prime minister kicked out of office. And so they're having a revolving door government now, where the last prime minister named his cabinet and then he resigned like 16 hours later because there was so much blowback. So they're past the point in France where they can actually stop what's coming. They're going to go bankrupt regardless. And it's very obvious there because of all the political turmoil that's following the financial crisis. But it's basically the same everywhere else. Japan has the same problem. China has that problem. Most of the rest of Europe, including Germany, are rapidly going bankrupt. And the U.S., I mean, we've borrowed insane amounts of money, and we're still running, even though it's not a crisis. We're not at war. There's no natural disaster or anything. We're still running $2 trillion a year deficits, and the cost of the interest cost on that debt is going parabolic, which adds to next year's deficit, which in turn increases next year's debt. And we have nothing we can do about that either. There's no way to stop this. Even if the US government tried, the only way they could do it mathematically would be to cut baby boomer entitlements in half. And we won't put up with that. My generation will never accept cuts in benefits, so it's not possible to fix any of this stuff. Now, if that's true, if we're headed for, or we're at a point where governments have no choice but to inflate away their currencies, in other words, finance their ever increasing debt with newly created currency at the cost of the exchange rate of that currency. If we have no choice but to do that, then that means the precious metals story is way more interesting than it was in those previous two bull markets, because the world's currencies were basically relatively stable during those two bull markets. And so we had the nice run in gold and silver, and then they peaked, and then they started trending down again, or they plunged in 1980, and they trended down in 2012 through 2019 or so. In other words, they were kind of a normal market, bull market followed by a bust, followed by long consolidation. It might be very different this time, because if these currencies are in the process of failing, then it's hard to see what the actual upside limit is for gold and silver, because taking it to its logical extreme, if the dollar goes to zero, gold goes to infinity when priced in dollars. So that makes the precious metal story much more interesting, and also harder to analyze, because how do you know when to take profits when the currency that you're pricing your gold and silver in is falling potentially to zero? So I don't have an answer for how to trade this whole thing, but I think there's a decent chance that precious metals are an absolutely epic holding from here on until this thing resolves itself somehow. So I think the people who've been stacking should continue to stack and hold for a long time. Don't think, okay, I doubled my money, I'm gonna cash out 2/3 of my holding. Don't do that in this market. There will be corrections, and some of them will be painful, but think of them as a buy the dip opportunity until the whole currency thing sorts itself out. Bull markets don't go in a straight line. They have spikes and then corrections and consolidations and all of that. And just the general trend is up overall when you zoom out and look at it over a long-term period. And so we could be getting close to a correction in precious metals right now, because it has been in a really exciting few months. That might be a reason to do a few things with your mining stocks. For instance, I have a lot of gold and silver miners, and I've written some covered calls on them, and I sold 10% of a given position a few times to just kind of lighten up on things that have had really nice runs. But also, yes, it's different this time, because this looks like the end of that fiat currency experiment. And in that case, you get the potential for a much longer run. So I would say if you're loaded up on physical, then just ride it. Make that be your generational wealth. Think of your pile of silver coins or gold coins or whatever as something that will bail your grandkids out 30 or 40 years from now when they really need it. So don't think of it as the thing you're trading in and out of it all. Now with your mining stocks, yeah, you look at a chart like you just showed, and that tells you to lighten up a little bit on some of your more successful positions, and that's reasonable. Taking a little money off the table in an equities position is frequently a really wise thing to do. So you can hold both of those ideas that gold and silver are overbought right now, and that this time is different, and the ultimate upside is much higher than it was in past bull markets. You can hold both of those ideas in your mind and be right both ways, very possibly. So it just depends from there on what your risk tolerance is and everything, how much you want to take off the table.
Instead of a typical market rally, John Rubino said, "What's happening in silver looks more like a scramble for the real thing." Industrial buyers and countries such as India are aggressively securing physical supply as mining output falls short and above-ground stocks dwindle. He points out that military demand is adding more pressure, with silver being vital for weapons and defense technology. Combined with global instability and fears of futures market weakness, Rubino sees this as the kind of tight, high-stakes environment that could send silver much higher. Historically, silver has shown relative resilience compared to equities during periods of market stress, as per the Economic Times report. For many analysts, silver's achievement was inevitable as the market has been firing on all cylinders, driven by robust industrial consumption and renewed investment demand. At the same time, analysts note that gold's run to $4,000 an ounce has helped pull silver prices higher as investors look for value in the precious metals sector. Analysts note that investment demand has picked up in recent months as investors have recognized growing value in silver due to its persistent supply-demand imbalance, driven by strong industrial demand. Let's get back to the interview.
Backwardation in a market generally means that physical supplies are really tight. In other words, there are people who are buying it right now. They want it today. They don't want to wait in the futures market, in part because there's some macro thing driving, the need for the material, in this case silver, in the short run, or there's fear that the futures exchanges are going to go bust or default or something like that. And in this case, I think you've got both of those fears out there. For instance, India radically increased its silver buying in the last couple of quarters. They bought much more than they usually buy of silver. And then you've got a lot of industrial users who require silver to make what they're making. And if it looks like silver supplies are going to be tight, while this is happening, silver's in deficit. The mines of the world aren't producing enough silver to cover demand. So we're having to eat into existing above ground stocks in order to satisfy all the demand. So, a lot of the companies that use silver in the products they make could very easily be saying, "Look, my CEO will kill me if we don't have enough silver to make next quarter's quotas, and so I'm just going to buy what I can in the open market right now." And so we stock up. Maybe we have a couple of quarters worth of metal there. So be it. And you might be seeing stuff like that out there, and that might be the reason for the backwardation. And if that's the case, that's phenomenally good for silver. If you've got some really big players out there who can't wait for 1 month in the futures market, then that's a sign that things are tighter than maybe they seem if you're just reading headlines out there. So, and that was always going to happen. Silver was always going to have a squeeze because as long as it's in shortage now, in other words, we're using above ground stocks to cover the deficit that exists in the market, there's always the danger that you just run out. Nobody knows how much extra silver is sitting around in the world that can be used to cover this deficit. And eventually, assuming there's a finite amount of silver out there, and eventually there will be a time it starts to run out and people start panic buying. I'm not saying this is that time, but I'm saying that when that happens, the beginning part of it will kind of look like what's happening right now, where you're in backwardation and the price is going up, and it's just a really favorable market for stackers who have a whole bunch of silver stashed away somewhere. So, um, whatever happens next, I can't say, obviously, but I think this is a really favorable time to own silver because of the structure of the market and because of the longer term trends and everything else you can think of about it. It's all pointing in the right direction. Oh, I think the price contributes to it, because if you see the price going up like this and you're somebody whose job it is to make sure there's enough silver on hand so General Dynamics can make as many missiles as the government wants or whatever, and you see the price going up like this, you start suffering from FOMO, fear of missing out, right? Because you know you're going to eventually have to buy X amount of silver, and you don't want to have to pay twice today's price for it. So maybe you just bite the bullet, pay today's price, and put security over profitability for a little while. And because the alternative, actually running out and not being able to make those missiles, that's more catastrophic than just overpaying briefly for a component that's not even that big of a deal per missile or per EV or per solar panel. So I think the price can cause backwardation, in other words, and that could be part of the story today. Nobody announces how much silver is in a given missile, so we don't know exactly how much. There's no way to run a spreadsheet with the information we don't have, but supposedly it's considerable. Supposedly there's a fair amount of silver in a given missile, and the first battle between Iran and Israel, I think, was very important because Iranian missiles evaded Israeli missile defense systems in a lot of cases. And so I think the rest of the world's military procurers looked at that and said, oh, missiles work. We're going to need more missiles. So probably the whole rest of the world's military industrial complexes chose to increase the number of missiles that they're going to have on hand, since they saw missiles work against a supposedly sophisticated missile defense system. And so that probably increased the demand for silver. And again, that could be part of the cause of backwardation. You've got these militaries out there who are putting in orders, leading the missile makers to not really care what they have to pay to get the orders out the door, And so the result is an extremely tight market. And I don't really see any end to that unless we make peace all of a sudden. And that doesn't seem to be in the cards, And Trump ran as a peacemaker, but he sure is involved in a lot of stuff in the world if that's his attitude. And it's highly unlikely that a year from now the Middle East is placid and peaceful, or in Europe. Europe is the worst actor in the whole geopolitical story right now, because they're actively trying to start a war with Russia, it looks like, and they're probably doing that to distract their people from their domestic mismanagement. But there are very few things that make it worthwhile picking a fight with a nuclear power, and Europe seems to be doing that. And it's just hard to believe that there's any political reality in Germany or France or wherever that makes it worth taking that risk. But there they are doing it. So, bad for most of us, great for silver.
A more bullish scenario, should the Federal Reserve's independence be compromised, could see gold climb to $5,000. After a major rally, a short-term pullback is possible due to profit-taking. Investors should be prepared for volatility. There's real fear that this rush could fall apart, just like it did after the 2008 financial crisis. Back then, a similar gold rush led to a wave of bad decisions, mergers that made no sense, rising production costs, and fat bonuses for executives. Investors long have turned to precious metals amid heightened economic uncertainty, and that's been particularly true in 2025. If gold and silver are once again becoming the ultimate measure of trust in money, are we witnessing the early stages of a full reset in how global wealth is defined? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.